Most people think you need perfect credit and a pile of cash to buy a business. This delivery driver proved them all wrong with just $80,000 and a handshake deal that banks wouldn't touch. By the end of the story, you'll see exactly how Marcus turned a failing car wash into a machine that prints $8,000 every month while he sleeps. And the best part, he did it with seller financing when every bank said no. Marcus Rodriguez spent his days driving for 3 different delivery apps just to make ends meet. Pizza runs at lunch, groceries in the afternoon, and late night food deliveries until 2 a.m. 12-hour days, 7 days a week, and he was barely scraping together $3,200 a month. But Marcus had a problem that millions of Americans face. His credit score sat at a painful 580. 2 years earlier, a medical emergency had wiped out his savings and left him with defaulted credit cards. Banks looked at his application like he was asking to borrow the moon. The worst part? Marcus knew he was trapped in what he called the hourly prison. No matter how hard he worked, he could only drive so many hours in a day. His income had a ceiling, and that ceiling was crushing his dreams of financial freedom. Late one Tuesday night, after delivering his 47th order of the day, Marcus sat in his beat-up Honda Civic and made a decision that would change everything. He pulled out his phone and started researching businesses for sale in his area. That's when Marcus found it. A car wash listed for $80,000 on a local business for sale website. The listing was sparse, just 3 photos and a paragraph of text, but something about it caught his attention. The car wash sat on a busy street corner, right across from a shopping center and 2 gas stations. Traffic flowed past all day long, yet the place looked abandoned. Weeds grew through cracks in the concrete, and half the equipment sat broken. Most people would have scrolled past. Marcus saw opportunity. The listing mentioned seller financing available, words that made his heart race. This could be his way around the credit problem that had blocked him from traditional bank loans. Marcus called the number the next morning. The owner, 67-year-old Frank Peterson, sounded tired and frustrated. Frank had owned the car wash for 15 years, but health problems forced him to step back. Without daily management, the business had slowly died. "I just want out," Frank told Marcus during their first phone call. "Banks keep sending people who want to lowball me or change everything I built. Maybe you're different." Marcus knew nothing about car washes, but he knew how to research. For the next 2 weeks, he became a detective. He visited the location at different times of day, counting cars that passed by. Rush hour brought steady traffic. Lunchtime saw a decent flow. Even late evenings had potential customers driving past. He walked through nearby businesses, asking owners about car washing habits. The gas stations didn't offer car washes. The closest competition was 3 miles away, a fancy place that charged $25 for a basic wash. Marcus discovered something important. This area had what business people call underserved demand. Thousands of cars passed daily, but nowhere convenient to get washed. The numbers Frank showed him told a story of decline, but also potential. 3 years ago, the car wash generated $12,000 per month in revenue. Last year, with minimal marketing and broken equipment, it still pulled in $4,800 monthly. If it makes almost $5,000 with everything broken, Marcus thought, what could it do fixed up? Now, Frank wanted $80,000 for the business. That included the land, building, all equipment, and an existing customer base of monthly subscribers. Marcus had saved $15,000 from his delivery work. Every spare dollar for 2 years. Not nearly enough for a traditional down payment. But Frank proposed something different, a seller finance deal where Marcus would pay $15,000 down and take over monthly payments of $1,200 for 6 years. Frank would hold the note, essentially becoming Marcus's bank. The math was tight but possible. Even at current revenue levels of $4,800 monthly, minus $1,200 for the loan payment, Marcus would net $3,600 before expenses. That beat his delivery income, and he saw room for growth. Marcus spent sleepless nights running numbers. Equipment repairs would cost roughly $8,000. Marketing to bring back customers might take $2,000. Operating expenses like utilities, insurance, and supplies would run about $1,800 monthly. But if he could get revenue back to $8,000 per month, still below the historical peak, he'd net over $5,000 monthly profit. That was more money than he'd ever made, working normal hours instead of 12-hour grinding days. Marcus met Frank at the car wash on a rainy Thursday morning. Standing in the empty bay, surrounded by broken equipment and cracked concrete, Marcus felt his confidence wavering. Frank seemed desperate to sell, but he also seemed stubborn about price. "I've put my life into this place," Frank said. "$80,000 is already a bargain." Marcus had learned enough about business valuations to know Frank was wrong. A business making $4,800 monthly, roughly $57,600 annually, typically sells for 1.5 to 2 times annual revenue. That put fair value around $75,000 to $90,000. But Marcus also knew Frank's position. Carrying a business loan wasn't attractive to most 67-year-olds. Frank needed steady monthly income more than a big upfront payment. Marcus proposed a creative solution. He'd pay $75,000 total, $5,000 less than asking price. But Frank would get $1,200 monthly for 6 years. Plus, Marcus would handle all repairs and improvements at his own cost. Frank would also retain a small ownership stake, 10% of profits above $6,000 monthly for 3 years. This gave Frank upside if Marcus succeeded wildly, but protected Marcus from overpaying if the business stayed flat. After 2 weeks of back and forth negotiations, they shook hands on the deal. Even with seller financing, Marcus needed cash for the down payment, legal fees, and immediate repairs. His $15,000 savings would cover the down payment, but nothing else. Traditional lenders wouldn't touch the deal. Marcus's credit score eliminated bank loans. Credit cards were maxed out from previous emergencies. Marcus got creative. He sold his Honda Civic and bought a cheaper car, freeing up $3,000. He picked up extra delivery shifts, working 16-hour days for 6 weeks to save another $2,000. His sister loaned him $3,000 against her tax refund. A former co-worker invested $2,000 in exchange for free car washes for 5 years, a deal that actually saved Marcus money on marketing. The hardest part wasn't raising money, it was the due diligence process that business buyers call looking under the hood. Marcus hired a local attorney for $800 to review contracts and local regulations. He discovered the property had a lien from an old utility bill that Frank hadn't mentioned. Resolving that cost another $1,200, but prevented future legal problems. An equipment inspection revealed more damage than visible from casual observation. The main washing system needed a $4,000 overhaul, not the $2,000 Marcus had budgeted. Most devastating, Marcus learned that the city planned to repave the street in front of the car wash the following year. Construction would block access for 3 months, killing revenue during that period. Standing in the attorney's office, holding a pen over the final purchase agreement, Marcus felt panic creeping in. The numbers he'd calculated so carefully suddenly seemed optimistic. Equipment repairs would cost more than expected. The construction project would hurt revenue for months. His savings were completely drained. Frank sat across the table, looking hopeful but nervous. The old man had already spent money he expected from the sale. Marcus's attorney leaned over and whispered, "You can still walk away. You've only paid for inspections so far." But Marcus thought about his delivery routes, the endless hours, the customers who didn't tip, the gas money eating into profits, the certainty that he'd never get ahead trading time for money. He signed the papers. Marcus took ownership on a Monday morning in March. The first week was brutal. Half the washing equipment didn't work. The payment system crashed daily. The previous part-time employee quit without notice. Marcus spent 14-hour days trying to keep basic operations running while learning everything about car wash mechanics, plumbing, and electrical systems. Revenue the first month dropped to $3,400, barely enough to cover the loan payment and utilities. But Marcus had learned something important during his delivery days. Customer service could overcome almost any other problem. He stationed himself at the car wash every day, greeting customers personally. When equipment broke down, he offered free services next visit. He started a text messaging system to alert regular customers about weather conditions perfect for car washing. Most importantly, Marcus fixed problems immediately instead of letting them compound. The water pressure system that had been weak for months got completely rebuilt. Marcus learned to do the work himself, watching YouTube videos and calling equipment manufacturers for guidance. He painted the building, fixed the lighting, and planted flowers in the planters Frank had let die. The place started looking like a business instead of an abandoned lot. By month 3, revenue climbed back to $5,200 monthly. Marcus was breaking even after loan payments and expenses, but he wanted more. Marcus studied successful car washes in other cities. He learned about subscription models, premium services, and customer retention strategies that Frank had never implemented. He launched a monthly unlimited plan for $25, cheaper than 2 visits at his old prices. Within 6 months, 180 customers signed up for monthly plans, creating predictable recurring revenue of $4,500. Marcus added services Frank had never offered: hand waxing for $15 extra, interior vacuuming for $10, detailing packages for $75. These high-margin services increased average transaction values from $8 to $12. The biggest breakthrough came from Marcus's delivery experience. He understood convenience better than Frank ever had. Marcus partnered with local businesses to offer on-site car washing. Office complexes paid him $300 monthly to wash employee cars in their parking lots. Restaurant owners loved the service for keeping customer-facing areas clean. He bought a mobile washing unit for $8,000 and started servicing customers who couldn't come to the fixed location. This mobile service generated an additional $2,800 monthly with margins over 70%. The breakthrough that turned the car wash into a passive cash printer came in month 8. Marcus invested $12,000 in automated payment systems and app-based controls. Customers could start their wash cycles from their phones, pay automatically, and never interact with staff. He hired 2 part-time employees to handle cleaning and maintenance while he focused on business development and customer acquisition. The subscription customers loved the app integration. They could wash their cars anytime without waiting in lines or dealing with payment systems. More importantly for Marcus, the automation meant the business could run without his constant presence. He went from working 14-hour days at the car wash to checking in for 2 to 3 hours daily. Revenue hit $8,400 monthly by the end of year 1. After loan payments, employee costs, and operating expenses, Marcus netted $5,200 monthly, more than he'd ever made in his life. Success with the first car wash opened doors Marcus hadn't expected. Frank, impressed with the turnaround, introduced Marcus to other business owners looking to retire. Marcus discovered a network of older entrepreneurs who preferred seller financing to dealing with corporate buyers. 18 months after buying the car wash, Marcus acquired a second location, a struggling quick lube shop, using the same seller financing strategy. The quick lube purchase required only $8,000 down because the owner was desperate to retire. Marcus applied the same customer service and automation principles that worked at the car wash. By year 2, Marcus owned 2 businesses generating combined monthly profits of $8,200. He'd gone from making $3,200 as a delivery driver to earning $8,200 as a business owner. More importantly, the income was largely passive. Both businesses ran with minimal daily involvement from Marcus, who spent his time finding and evaluating new acquisition opportunities. Let's break down exactly how Marcus transformed his financial life. Before, delivery driver earning $3,200 monthly, working 84 hours per week with no assets and poor credit. After, business owner earning $8,200 monthly, working 25 hours per week with 2 appreciating assets and improving credit from business loan payments. The car wash that Frank was desperate to sell for $80,000 now generates $8,400 monthly revenue and profits of $5,200. Based on typical business valuations, the car wash is worth approximately $130,000, a $50,000 increase in just 2 years. Marcus's total investment was $15,000 down plus $12,000 in equipment upgrades. His $27,000 investment created an asset worth $130,000 and generates $62,400 annually in passive income. The seller financing structure that seemed risky actually protected Marcus from the biggest danger facing business buyers, taking on too much debt up front. Marcus's story reveals principles that work in almost any business acquisition. Seller financing opens doors that banks keep locked. Thousands of aging business owners want steady monthly income more than lump sum payments. This creates opportunities for buyers who can't access traditional financing. Underperforming businesses often hide solid fundamentals. The car wash location, customer base, and market demand were all strong. Only management and maintenance had failed. Customer service can overcome almost any other business weakness. Marcus couldn't immediately fix all the equipment problems, but he could treat customers better than they'd ever been treated. Small improvements compound into big results. Marcus didn't revolutionize the car wash industry, he just fixed obvious problems that Frank had ignored. Automation creates true passive income. Nisi. The key to Marcus's success wasn't working harder, it was building systems that worked without constant supervision. Most importantly, Marcus proved that you don't need perfect credit, massive savings, or business experience to acquire profitable businesses. You need persistence, creativity, and willingness to solve other people's problems. Marcus's transformation extended beyond just financial numbers. His improved income allowed him to move his family from a cramped apartment to a house with a yard. His kids could participate in activities that were previously unaffordable. Marcus's credit score climbed from 580 to 720 as he made consistent business loan payments and maintained positive cash flow. Banks that once rejected him now actively courted his business. The flexible schedule meant Marcus could attend his daughter's soccer games and his son's school performances. Luxuries impossible during his delivery driving days. Most surprisingly, Marcus discovered he enjoyed business ownership more than he'd expected. The challenge of improving systems, serving customers, and building something valuable gave him satisfaction that hourly work never provided. 2 years after buying his first business, Marcus started a consulting service helping other people navigate seller finance business acquisitions. His weekend hobby now generates an additional $2,000 monthly, helping delivery drivers, retail workers, and other hourly employees become business owners. Marcus's plans for the next 5 years show how business acquisition can create compound wealth. Year 3, acquire a third business, targeting another service-based operation with seller financing options. Year 4, begin transitioning from operator to investor by hiring management teams for each location. Year 5, launch a business acquisition fund, partnering with other investors to buy larger businesses while maintaining the seller financing approach that started his journey. Marcus estimates that by age 35, his business portfolio will generate over $150,000 annually in passive income. The delivery driver who once worried about making rent will achieve financial independence through a strategy that required no special education, family connections, or startup capital. The car wash that Frank couldn't sell to banks became the foundation for generational wealth, and it all started with a handshake deal that traditional finance experts would have called impossible. If a delivery driver with bad credit can turn $15,000 into passive business ownership, what's stopping you from finding your own $80,000 opportunity? Subscribe if you want to see more stories about people who refuse to accept financial limitations.